Good morning, everybody. A happy Monday. All right. Can you guys hear me okay? Very good. All right, let's get started. Cool. All right. Good morning, everybody. Happy Monday. I'm still on the road here, but only sort of half on vacation this week. We've got a whole lot of stuff to talk about. I think last week was an important week, and we do need to start talking about what this kind of looks like now for the month of August. Now that we are basically starting August more meaningfully here today and on Monday. If you're here for the first time, this is our Set the Market morning call. I'm Serge Berger from thesteadytrader.com. We're going to spend the next 10 to 15 minutes going through the top few things on my notepad. And I guess what I'd like to do as first is just remind everybody to please make sure you give us a thumbs up, like, and that you subscribe to the channel. It's obviously completely free, but it allows you to be updated in real time when we go live with our analysis. Also, we've been doing a lot more YouTube shorts, pretty much one a day or more. So if you are looking to be kept up to date with certain things that we're doing, please make sure you join those. And of course, if you are a member, we'll see you guys over in about 25 minutes over in Trade Ops, which is our live members area. So that's to look forward there as well. So first of all, let's just kind of remind ourselves where we're at. We're entering the month of August, or we did enter the month of August last week on Friday. And what I'd like to do is just give people a bit of an idea or a reminder, and I do this every single year at the beginning of August, is to remind people that August is a binary month when it comes to the markets. That's to say that August can be extremely boring, or it can be the exact opposite, and we don't know what it is until it actually happens. Last August, you may or may not recall, we had the Japan the carry trades begin to unwind a little bit. That caused some volatility. So last year's August was volatile. I don't know what this August brings. I tend to think that we might see another volatility spike now that the trade deals are to a large extent known, or at least being worked on, right? So I wouldn't be surprised if we see a little bit of a volatility spike now that the news is out. I had a pretty lengthy discussions over the period last week, essentially, where it's becoming more and more clear that hedge funds are basically all in on this market, and that is typically a sign when there's not many more marginal buyers that maybe volatility picks up. I'm a completely open-minded, somewhat relaxed after a few days off last week, but more importantly, definitely open-minded because we have to be. This is not a normal market what we've experienced for the past 15 years. It's in many ways we can call it rigged if we want to. It's not the terminology I choose to use, but it's completely machine-driven, and passive investing essentially rules the day, and that is actually an extremely unhealthy market, because when that unwinds, it blows up everyone's retirement accounts, which will happen this time as well. Except that this time the baby boomers have a lot more to lose than they had 20 years ago when it happened last time, or 16 years ago when it happened last time. And so we're trying our very best to educate people to make sure that they don't fall into this trap. What you're looking at here on this chart, if you're wondering what this is the S&P 500, and what I did is I tried to annotate the past few months of August. So last year, the year before, and the year before then, so 22, 23, 24. And if you look at it, you can see that the month of August for the past 3 years did exhibit some volatility each time. So I think we're at a pretty critical point. Now, what's to me more important here to go through this morning, just from a more tactical perspective, is that you will notice that we had last Thursday on the back of the Meta and Microsoft earnings, we had an almost outside bearish reversal day in the S&P 500. So that's the SPY ETF. If you have never looked at that before through a lens of an ETF, that's last Thursday, excuse me. We actually had an outside reversal day last Tuesday, less pronounced, and then last Thursday, almost. I mean, it got really close. It was big enough. And then, of course, on Friday, we followed through with the jobs report. By the way, I should mention jobs report. A lot of revisions on that jobs report. I saw a note by Goldman that came out that they said that's the largest downward revision in jobs openings outside of a recession, I think, ever is what they said. Who knows? I just sit up and take notice when I get that kind of information, and so I just thought I would pass that on. But I think more importantly, what we saw last week as a result of this move is essentially the S&P 500 breaking below a support line that it had been holding all the way since breaking above that in April. If you look at that yellow line on your screen, this is the line in the sand that a lot of algorithms tend to follow. And you can see we finally closed below that line on Friday. And even more importantly is the weekly close. So if you look at this on a weekly closing basis, you can see that last week we had an outside reversal week on a weekly basis. So that's the entire week of last week. We had an outside reversal week. Now, again, this does not mean it's the end of the world, but I do want to just quickly point out for anyone that may or may not care, is that the last time we had a big outside reversal week like that was actually the middle part of February. We had more or less an outside reversal week, and then of course the S&P ended up dropping from that point on as much as about the 20%. That is not my forecast here. Let me be very clear, but I'm just pointing out that this is that when things get overbought, they can get unbound pretty quickly. That's more my point here. So that's the S&P update. Now, you might be wondering what's happening you might not be wondering, but I'm going to tell you right now. What's concerning to me is that the leverage in the system, and I mentioned this last week to a bunch of members, I mentioned to them that, let me quickly show this here. I mentioned last week that just as we were getting to these extreme overbought levels, we're also hearing and seeing that the margin debt is basically at record high levels ever. So if you look at the chart here, this is the margin debt that we have. Basically, the record amount of people are playing on leverage, and that's not surprising. We're definitely in the, and I'm not going to offend anyone here, but I definitely think we're in sort of the, retail trader mom and pop kind of phase of the bull market. There's no doubt about that. Just the question is whether it's over tomorrow, or it was over last week, or it's over in 6 months or in 5 weeks. I don't know, right? In a much bigger way. I do not know, but I do know that when margin debt gets to these levels, and we've never seen these levels before, I should mention, and you see the behavior that you're seeing, things are at a point where it's just more difficult, right? That does not mean that we can't make money on the long side. I think there's plenty of opportunities, but right now going into August, this is to us certainly something we want to take advantage of. So a lot more people are basically buying stocks on margin to lever up their bets. It's classic behavior of very, very late cycle of the market. The last thing that I want to mention here, I don't necessarily need to go into individual stocks, although I will show you one stock in just 1 second. I do want to quickly, before we get to that, just point out what I've been mentioning now for some time, and that is 2-year yields. If you've been following us, if you're a friend of the show here in the morning, or if you're obviously a member over at thesteadytrader.com, I've been talking about if we were to break back below 3.7% on on the 2-year yield, which we did last Friday on a weekly closing basis, then I might get interested in being basically buying 2-year treasury futures, which is a bet on 2-year yields going lower, which is basically a bet that the Fed might cut rates at some point sooner rather than later. I might give this trade a shot again this morning. I haven't yet fully decided. Maybe I'll give it until tomorrow. If you're a member, I will let you guys know over in Trade Ops. But this is pretty important, right? This is your 2-year yield chart, and I just think that this is something we need to pay attention to. You can draw these lines in so many ways. In fact, this is not becoming a bit silly to draw a line this way, but I can kind of maybe I'll draw it a bit more interestingly for people who like to watch this kind of stuff. Maybe we can draw it like this, right? This might be a bit more appropriate to draw the line this way. And you can kind of see that we've been sort of, finding resistance and now we're breaking. So that's something that I'm looking at. Last but not least, I don't know if you guys saw my video last week. I talked about the most important stock in the world, which to me is JP Morgan. And, it's not just because it's my alma mater, but it is, I think, in a tremendously important stock to watch, because the company JP Morgan has an incredible insight into the global economy through their investment banking activities around the world, and of course, in the US, the retail banking as well. So JP Morgan is once again at the very upper end of its trading range. You can see that there. And to me, this is not the kind of thing that I want to chase. This trading range here is now 14 years old. So, by all means, let's just keep this one in mind, that it's probably not extremely likely that JP Morgan from here has a lot more upside. And I should mention, and this is why this is important, it's not just JP Morgan. If we overlay the price of the S&P 500, you can see it's tracks it almost the same exact way, right? So that shouldn't be surprising to anyone. Quickly check one thing here if I can change this. No. Anyway, it's the same chart. The S&P is also at the same level. So if JP Morgan has a difficult time going higher from here, I think the S&P will be quite limited as well. So that's my view. I hope it was helpful. We'll see all of you guys that are members over in Trade Ops, where we will see if there's some trades to do here today. In the meantime, have a great start to the week. It's good to be sort of at least semi-back this week, and we'll see you back here tomorrow morning on Tuesday morning as well. Until then, have a good trading day, and if you're a member, I'll see you over in Trade Ops in a few minutes. Take care.